If you're out there wondering how in the world you can begin to generate steady, reliable passive income without getting gypped by the countless amounts of scams that are out there, I have just one word for you: dividends. However, today, I'm not just going to load you up with any 3 dividend stocks. Today, I'm going CNBC 3-stock lunch style on 3 real estate investment trusts that are ultimately going to pay you every single month. That's right, monthly dividends, meaning more money in your pocket on a monthly basis for you to ultimately pay your bills, make it rain, or better yet, just reinvest those dividends for more monthly dough. With that, let's dive right in. So first off, let's have a chat about real estate, shall we? Why? Because everyone is always sharing that real estate is an incredibly more powerful and more lucrative route than just investing into plain old stocks. And to that end, there's certainly some validity behind that rationale. However, let's be real with ourselves. There are a multitude of reasons why getting yourself tied down to physical asset classes like real estate may not necessarily be your best next move. I mean, just right off the bat, perhaps you don't have the necessary funding to front a 20% down payment, or maybe dealing with tenants and all that saga doesn't seem too appealing to you. Or it very well could be the combination of the two that just puts you off the whole real estate investing route entirely. All of which I can certainly understand. But we cannot deny the fact that real estate in and of itself should be a part of your portfolio. After all, it's all about diversification, to which then we have a simple solution: real estate investment trust, or REITs for short, which are holding companies that own, operate, and finance income generating properties for you. And as mentioned, today, I have 3 of them for you, thanks to our macro environment of higher interest rates, which is certainly spooking away a lot of investors from REITs entirely. All 3 are trading right now at some lower lows. So let's go ahead and have a look at our first real estate investment trust, Agree Realty, ticker symbol ADC, which is primarily focused on the acquisition and development of large-scale retail properties that are net leased to commercial tenants. So none of that more risky mom-and-pop type shop stuff, but we're talking about the Walmarts and CVS pharmacies, Home Depots, Tire Kingdoms, and Tractor Supply commercial giants, gifting Agree Realty shareholders with some more certainty, as such tenants tend to hold longer-term leases. Now, all in all, Agree Realty has amassed a portfolio of 2,084 properties that total more than 43 million square feet of rentable space across the United States in all but one state. So talk about becoming a real estate titan. Agree Realty can be yours right now for under $60 a share at $57 per share, currently down by 15+% year to date. Now, its past performance doesn't drive future trajectory, but heck, a successful track record is a track record nonetheless, to which we have over 214% worth of growth over the last decade alone, with analysts foreseeing more upside here to a share price of $65.06 per share. That's 13% worth of appreciation, but that's not even what caught my attention in more recent days when it comes to Agree Realty. As an investor, one of the best insider indicators is when I see buying activity, especially informative buys. And that's exactly what we see here with Agree Realty, as insiders have been scoring hundreds of thousands of dollars worth of Agree, from the CEO in October to the chief growth officer and director back in September, on top of plenty of hedge funds who have also been loading up on Agree Realty. Now, while all of these are good signs, we are here for monthly dividend income, and say no more, Agree delivers with a growth rate here coming in at 6.49% over the last 5 years, with a current dividend yield at 5.13%. Next up, you'll have to bear with me with this one because insiders actually recently sold it, which is not a great sign for the near term, but I'm all about the long term with LTC Properties, ticker symbol LTC, which, as per their own words, is focused on investing in senior housing and healthcare facilities, primarily with a portfolio that is split 50-50 between senior housing and nursing facilities. Now, there's really 2 unfortunate realities in life: taxes, and, well, old age. Now, none of us are going to live forever, and, well, then therefore we may find ourselves in need of one of their plush senior care centers. Perhaps out of the 27 states that they're operating out of, we could find ourselves in one of their 208 properties. Either way, what's even more depressing than that is just the fact that the stock depreciated and slid by 8.5% from this time last year, once trading for $40 per share, now only at $32 per share. And while analysts are here with near-term upside regarding regarding the share price forecasted at $33.75 per share, we could very well see plenty more upside in due time. After all, we can see that their assets totaling over $1.6 billion trump their debts of just $805 million, and year over year we do see a positive trend here, keeping it all very simple. But something to be said again about insiders, especially their CFO, recently selling $500,000 worth of shares. But think longer term here as mentioned, because that's what matters. And we could see over 50% worth of growth over the last 10 years. So perhaps just one for your watch list at this point in time, especially as it does show out a hefty dividend here, coming in at a dividend yield of 7.01%. And then there's always the investor craved monthly dividend pride and joy realty income, ticker symbol O, which is a personal choice and top investment in my portfolio. Now, this net lease solutions leader focuses solely on single tenant properties, aiming to lease them out to the most prominent retailers from your corner store 7-Elevens to your Dollar Generals, Walmarts, Walgreens, Kroger's, and Home Depots. Now, all in all, Realty Income has over 13,000 properties that touch every single state and even beyond the U.S. borders. Now, they have over 1,300 clients and typically maintain a 99% occupancy rating. So if you want that reliability, there you have it. However, that doesn't mean Realty Income goes untouched with our macro situation. We do see this REIT has plummeted by over 12% on the year, trading for just $53 per share as of this video. However, let the record stand that over the last 10 years, it has proven itself time and time again, appreciating by nearly 130%. As of this recording, top analysts remain bullish with 13% worth of a recovery expected, rising back to $61 per share, while hedge funds align as they scored over 248,000 shares purchased last quarter when it was trading at even lower lows. But now, what's in it for you if you choose to invest into this dividend aristocrat? Great question. And it's an easy answer. You're going to enjoy a monthly dividend that has grown over the last 25 years by 3.69% over the last 5 years, currently shelling out a cool 5.7% dividend yield. Now, there you have it, 3 real estate powerhouses that shell out monthly dividends to generate you steady passive income. Let me know your thoughts on each of them. If you own them or if you have better ideas in mind, comment down below. Of course, enjoy more stock ideas right here, but before you click away, make sure you're subscribed so you never miss a single stock idea.